The storm doesn't start with thunder. It begins with silence, a quiet hum beneath the illusion of prosperity. They tell you the system is strong, the markets are steady, and the fundamentals are sound. But beneath the polished headlines, America is drifting toward a cliff, one made not of rock, but of numbers, promises, and denial. In the shadows of boardrooms and briefing halls, the truth is being buried. Total U.S. household debt has exploded past $18.39 trillion, rising by $185 billion in just one quarter. Credit card balances have surged another $27 billion, auto loans by $13 billion, and student debt is climbing once again. Meanwhile, the government's structural deficit has widened to an abyss, spending 23.5% of GDP while bringing in only 17% in revenue. The math doesn't balance, the illusion does. They want you to believe it's under control, that growth, innovation, and resilience will keep the system afloat. But the numbers are no longer whispers, they're warnings. The Congressional Budget Office projects that federal debt held by the public will soon eclipse every historical peak. The IMF now warns that by 2029, global public debt will equal the world's total GDP, and America stands at the center of that storm. This isn't alarmism, it's awareness. When the illusions fall apart, when credit spreads widen, defaults ripple, and confidence cracks, only those who've seen through the noise will be ready. The illusion of stability begins with a lie, that high debt is manageable. They say it every year, every crisis, every election cycle. Yet the federal debt-to-GDP ratio is projected to climb from 125% in 2025 to 143% by the decade's end, placing the U.S. among the most leveraged economies in human history. That means every new dollar of growth is already sold, used not for building, but for paying interest on the past. The CBO warns that with falling birth rates, stagnant productivity, and mounting social costs, true economic growth could flatline over the next 3 decades. Yet in the short term, the fire burns hotter. A looming 2025 government shutdown could erase $15 billion a week in lost output. But what the public doesn't see is the fragility under the surface. The government is rolling over vast sums of short-term debt in markets hypersensitive to the slightest tremor. Credit spreads, yields, funding costs all twitch at the smallest sign of strain. America's privilege to issue debt in its own currency remains a lifeline, but lifelines fray when faith disappears. The IMF now warns that hidden vulnerabilities in shadow banking and interlinked credit markets could magnify any shock into a chain reaction. On paper, the numbers still add up. In practice, the system is cracking. The stability you see is an illusion painted over uncertainty. And as this illusion stretches thin, another begins, the promise of a booming digital economy. Politicians, analysts, and tech leaders call it the AI era, the next wave of unstoppable growth. But they don't mention the silence beneath it. Jobless growth, hollowed-out industries, and a middle class fading into history. Goldman Sachs warns that America is entering a new regime, one where GDP rises but jobs vanish. Manufacturing is bleeding. 78,000 jobs lost in a single year. AI investment surges 37%, but human livelihoods fall behind. Across 9 of 12 Federal Reserve districts, economic activity is flat or shrinking. The illusion persists. Sleek tech campuses, glowing earnings reports, and headlines about resilience. But behind them stands a vanishing middle class, a workforce excluded from the very growth it built. When the shutdowns delay critical data, jobs reports, inflation metrics, trade balances, what's left is a distorted reflection of health, a simulation of stability in a system built on debt. And that brings us to the next revelation, the silent recession, a downturn that hides behind manipulated metrics, where the cracks are already visible, but the narrative insists everything's fine. By the time the public begins to feel the slowdown, the architects of the system have already moved their pieces. Markets don't crash in chaos, they descend in patterns. Credit tightens first, then hiring freezes, then the headlines turn from optimism to confusion. Behind the scenes, financial institutions begin whispering about liquidity stress. Bank reserves thin. Corporate refinancing becomes desperate. And the U.S. Treasury, the foundation of global finance, suddenly faces the unthinkable: a rising cost of debt so severe it threatens to consume the very government it funds. In 2025 alone, Washington will pay nearly $1.2 trillion in interest, more than its entire defense budget. That means more money goes to creditors than to soldiers, schools, or social programs. Every interest payment is a quiet surrender, one more dollar pledged to sustain yesterday's excess. Economists call it the debt trap. Once you enter it, you can't grow fast enough to escape. The only options left are inflation, austerity, or collapse. Inflation steals from the people, austerity breaks them, and collapse resets the board entirely. The illusion continues because it must. Stock markets rise not because of prosperity, but because the alternative, reality, is too frightening to face. The Federal Reserve has become the magician behind the curtain, conjuring stability with interest rate tweaks and asset purchases. But every spell has its price. As rates climbed past 5.25%, consumer defaults began to surge. Credit card delinquencies hit a 12-year high, and auto repossessions doubled in a year. For millions of Americans, financial ruin doesn't come with a crash. It comes with a phone call from the bank. Meanwhile, the housing market, once the symbol of American wealth, has turned into a fortress for the few. With mortgage rates above 7%, home ownership has fallen to its lowest level in over a decade. The dream that once built generations is now a privilege reserved for corporations and the wealthy. But the true danger isn't visible in any one number. It's systemic. The U.S. debt market underpins the global economy. If confidence falters, every nation, every bank, every investor feels the quake. The IMF, the World Bank, and central banks from Europe to Asia are quietly preparing for impact, building reserves, and diversifying away from the dollar. Even America's allies are hedging their bets. For decades, the dollar was not just a currency, it was an empire. But empires crumble, not with war, but with doubt. When foreign creditors begin to question repayment, they withdraw their faith, and faith is the only thing holding the system together. The warning signs are everywhere. Record gold purchases by central banks, surging interest in alternative payment systems, and the slow but steady erosion of U.S. global credibility. Once the world's safest borrower, the United States now stands on the edge of a credibility crisis. And yet the illusion endures. Markets remain calm. Politicians promise solutions. The media repeats that it's all temporary, that America has seen worse. But this time, the cycle is different. The debt is too large, the global stakes too high, and the people too tired to believe. The silent recession deepens, not in factories or trading floors, but in homes. Groceries cost more, paychecks stretch less, and small businesses, once the backbone of the economy, are shuttering at the fastest rate since 2008. The illusion of recovery hides a quiet desperation. The middle class, once the measure of America's strength, is being erased. In its place grows a new divide: those who control the money supply and those who are controlled by it. This isn't just economics anymore, it's survival. And yet, in every crisis, history whispers, collapse is not the end, it's the beginning of reckoning. As the pressure builds, the cracks in America's foundation begin to widen. What was once dismissed as market noise turns into unmistakable warning signals. Treasury auctions begin to fail. Foreign buyers pull back, demanding higher yields for the same bonds that once symbolized safety. The confidence that built the dollar's supremacy starts to fade. Behind closed doors, emergency meetings unfold. Economists argue over models, politicians over optics, and central bankers over timing. No one wants to say it aloud, but everyone knows the old playbook isn't working. Printing money now only feeds inflation. Raising rates risks implosion. The system is trapped, too big to fail, but too fragile to save. Abroad, the shift accelerates. Nations, long dependent on the dollar, quietly begin trading in other currencies. The BRICS alliance, once a loose coalition, now coordinates to bypass Western systems altogether. The oil markets begin experimenting with the petro-yuan, and for the first time in half a century, the dollar's dominance in energy pricing is challenged. The global balance trembles. For the US, it's not just an economic loss, it's a geopolitical one. Power follows money, and as capital flows east, influence follows. Washington's allies grow restless, uncertain whether to double down or diversify. The cracks in the Western alliance are no longer invisible, they're spreading. Back home, unrest brews quietly. Inflation has eaten through savings, wages can't keep up, and layoffs ripple through industries once thought untouchable. Corporate giants trim workforces, small businesses close their doors, and the average American household carries record levels of debt. The once proud middle class, the engine of the nation, feels betrayed. News anchors call it a temporary adjustment. Officials promise recovery. But in the streets, reality speaks louder. Shelves are stocked, but wallets are empty. People aren't starving, they're drowning in slow motion. The quiet hum of anxiety becomes the national soundtrack. Financial analysts warn that if the bond market buckles, the shock will spread everywhere, from Wall Street to the global south. And beneath it all lies a haunting truth. The same forces that built modern prosperity are now turning against it. The illusion of endless growth has met its limit. For decades, America's strength was belief, the faith that its debts would always be honored, its markets always secure, its currency always king. But faith, once broken, rarely returns. And as the world begins to shift, a question echoes across trading floors, think tanks, and living rooms alike. What happens when the global economy loses its anchor? Because this time it's not just about money, it's about trust. And trust, once lost, has a price that no nation can afford to pay. As the final chapter unfolds, the storm that once seemed distant is now at America's doorstep. Markets convulse. The stock exchanges flicker red, not for hours, but for weeks. The dollar, once the unshakable pillar of global finance, begins to slide. Confidence, the invisible glue of the entire system, melts away. In Washington, the silence is deafening. Statements of reassurance fill the air, but even those delivering them no longer believe. The printing presses that once brought recovery now only bring instability. Trillions are created overnight, yet somehow nothing feels secure. The world is watching the empire of debt face its reckoning. Across the ocean, trading screens tell a different story. Currencies that were once ignored now rise in strength. Gold and digital assets surge as people search for shelter. The global financial system starts to realign, not through war or conquest, but through necessity. The age of dollar supremacy begins to fade, not with a bang, but with exhaustion. In the streets, the human cost becomes impossible to ignore. Families watch their savings vanish, pensions erode, and prices spiral beyond reach. The great American dream, The promise of stability and prosperity feels more distant than ever. But amid the chaos, something else begins to stir. Awareness. People start asking questions once considered taboo. How did it come to this? Why was the system built on promises that could never be kept? In small towns and crowded cities, voices rise, not in rebellion, but in realization. The fall of the dollar isn't just an economic event, it's a moment of awakening. And from that awakening comes something unexpected, a chance to rebuild. To imagine a system not bound by endless debt, but by balance. Not driven by greed, but by sustainability. Economists begin to speak of reform, innovators of decentralization, and citizens of accountability. The United States, though shaken, does not disappear. Like every empire before it, it faces the mirror of history, a reminder that power is temporary, and trust must be earned anew. The dollar may fall, but the spirit of reinvention remains. As the world shifts into a new era, one truth lingers above all. No empire lasts forever, but from every fall, something new is born. And as the credits of this century turn, the final question is not who will lead next, but who will learn. Because in the end, it wasn't the collapse that defined America's fate. It was how it chose to rise again.